Hi, and welcome to the Trading Pit. In today's video, I'm going to be talking about why I think the S&Ps could be heading to 7,000 points this summer. I'll tell you why. I will talk about silver and why I have a 10-week $43 target on silver. And finally, I'll go over an ES day trade from Friday, which my pattern number 5 had a perfect signal for. This is the pit. Personal investing tools and techniques for the active trader and investor. I'm Lundy Hill. I am not a financial advisor. This is not investment advice, and past performance is not indicative of future results. Here are the charts that caught my attention this past week, ending June 6th, 2025. First, we start off with the ES Futures daily bar chart. And this just proves that old patterns work. This is a completed head and shoulders pattern that I have labeled left shoulder, head, and right shoulder, and then the neckline. The breakout of the neckline was via a strong gap, and the move into the neckline should equal the move out of the neckline. So that put a price target in of over $5,900 on ES, which we got. Note that after the gap, there were very few down days in the move up over 500 points. So gaps are very strong, especially when they break trend lines or they break previous resistance and support levels. Next, let's stay with the ES and keep looking at this daily chart. Here I'm pointing out that today's close, well, Friday's close, was the highest close since February of this year. So that's 3+ months highs being broken. So that's the highest close. That is bullish. I believe the low risk trade based on this chart is to the upside. The asymmetric trade has us risking about 200 points to make potentially 500 to 1,000 points. Yes, I said 1,000 points from here. Why? Well, here's why. This is the weekly ES chart. I step back a bit and look at the weekly chart. Here we have a clear cup and handle pattern. The last 4 weeks have formed a nice tight handle, and this past week broke above and closed above the lip of the handle. A 100% wave projection puts ES at a 7,200 price target, and that's a quick move, projected to be sometime in mid-July of this year. I've got in a dotted line the roughly 75% wave projection, which is what I use, and also that comes in at 7,000, which I think would be a very key level to get above. And finally, for ES, let's step back and take a look at Friday's 5-minute bar action. Price gapped up this day very strongly, with more strength coming in via price follow-through for the first 3 5-minute bars. Then price spent the entire morning backing and filling in a protracted ABC reaction. And I haven't labeled that, but they should be pretty clear around the red horizontal line. This ended around 1 p.m. with a spring off of the A reaction low just below 59.90. Again, that's not marked, but it should be obvious. It's a double bottom, and then you had a nice pattern 5 foreclosed reversal. This could also be a pattern 7, which is covered in my book, 9 Patterns That Signal a Trend Change. Note all the bottom tails. These patterns can work especially well at key market levels of support and resistance. Here, it worked exceptionally well at the prior pivot low. This buy carried ES, this hypothetical buy carried ES for 20 points in just 75 minutes. That's very nice. Next, let's switch over to crude oil. Crude oil has been sideways for 2 months, and this action formed a nice double bottom around $55 per barrel. The high has been just shy of $65, we noticed from the midpoint of the double bottom, so a 10-point range. I believe Friday penetrated that high. It closed above the high, the highest close. It didn't close above the absolute intraday high, but I'm going to think that that's a valid breakout. The way to play a double bottom is to buy a break above the midpoint of the double bottom, and the width of the price from the midpoint to the low of the double bottom should be added to the breakout, and that gives us a target of about $73. And again, that's a full 100% wave target. I like to use 75% projection, and that puts the price around 75. There's no reason to get greedy. The U.S. is entering in a potential recession if we're not in one already, and that typically is bearish for crude. So that's why I like these asymmetric trades here. The low-risk trade, the low-risk asymmetric trade, I believe, is to the upside. A profit objective of $7, $8, $9 with a stop loss back below the recent congestion low at around 62. So we're risking maybe $3 or $4 to make $9. Next, let's go to silver. Here is the silver 5-minute chart. Speaking of tails, silver had a pattern 7 at the lows around 12 noon on Thursday. Thursday already demonstrated strength by gapping up big. You could buy these tail bottoms, buy a break of the highs of the bars which made the tails. You could have held this overnight, and you had another gap open Thursday. Or no, that was Friday. I'm sorry, a gap open Friday. But it did not hold above Thursday's highs, and it did not hold above the opening range, and it fell back into Thursday's highs, and it broke the first 30-minute range, which would have been a clear sign to come out. But still, that's a potential gain of 65 cents in a day. Of course, past performance is not necessarily indicative of future results. Now let's step back a few steps and look at the silver weekly chart. People around the web have been saying for months that $35 was a magic number for silver. They said once silver closed above 35, it was time to rally. And I agree with that looking at long-term charts, if you chart long-term patterns. Silver has formed a 10-month ascending triangle here, and we broke out of it this week. We broke out decisively in what my father would call a yum-yum. Using the width of the triangle from the August lows to the October highs gives us our wave projection. This gives us a target of silver at $43 an ounce. And that projection is for just a 10-week move. So this should happen very quickly if the time component holds. And I say it's about time. The gold to silver ratio has also been very active. It's fallen from about 100 all the way down to 92 in the last week. Looking at gold, we find that gold is 4 times its 1980 high of roughly $800. So I say it's about time that silver reaches 4 times its 1980 high of $50. That can put silver at $200 an ounce. Next, let's go to cocoa. Cocoa did just what I called for last week. I noted the spring off the lows last week, and cocoa had a slight reaction, then rallied. I noticed that the price should react back down to the support, the prior resistance, which is now support at 9,500. It broke that a little bit more than I like and reached maybe 9,300. I had a target for this rally of 10,750. Price broke above 10,500. That's pretty close. Friday, this past Friday, Thursday and Friday had a 2-bar flip-flop. Actually, it was Friday's because this is a 4-hour chart. And the last bar was an outside bar down on this 4-hour chart. This could send prices down to the congestion high area around 97.50 or lower. Again, I believe cocoa is back in no man's land and no position should be taken unless you can get it below 10,000 or possibly around 97.50. Look for one of my patterns. Finally, let's end with coffee. I expanded my coffee ABC reaction. I had an ABC reaction where this chart point labeled A, I had that as a C leg, but it actually formed an ABC down into A, then a B reaction up, rally up, and then the reaction back down to C low, which is right around the A low. And note the spring and strong tail up at that 320 level. Coffee is definitely in the buy zone with a nice asymmetric trade potential here. Last week flip-flopped the prior week, making new highs and closing about at that week's open, so it reversed the entire move down from the 2 weeks ago. A wave projection of the late 2024 to early 2025 rally puts prices for coffee objectively at 520. Again, this is asymmetric trading at its best. I hope you enjoyed this. Please like and subscribe if you found value, and leave a comment what I can do to make it better. Have a good day.